Hey guys, Austin market update time. Hope everyone's doing well. We have a special guest here today, so let's get into it after this. Alright guys, so let's get into it. Austin market update time. Switching it up a bit here. We've got Zoe, my wife and business partner, joining us. So let's dive in. Right, so reviewing the latest Austin Board of Realtors data, as we always do, we are up on the median sales price to just over $521,000. Active listings, inventory as well is a slight tick upwards. And total sales dollar volume is up as well. On the downtrend, we're seeing closed sales, days on the market, which is kind of like a good thing actually, that number coming down. It's 21 versus what it was last month. New listings is down, although it's significantly up versus last month. Well, I say last month, but this is March data. So March new listings is up versus what it was in February by quite an amount. And pending sales also. So that's the data. The story here really, well, before I get into that, first and foremost, tax appraisals. So deadline is fast approaching. It's going to be the 16th of May. There's going to be a significant increase in people's monthly PITI payments, anywhere between $200 and $600 in that range. If you need assistance with the protesting this, then there's a couple of options.
Yeah, there is still time to be able to protest them. And so 3 ones, there's a new kid on the block, and that is Home Tax Shield. 5 Stone have been around for a long time, and Texas Pro Tax. And we'll put the links down the bottom below. It's worth it. It's worthwhile doing it. If you are a homestead owner, then you probably would have only just had a 10% increase, but it's still valuable to do these protests to get the baseline down of those appraisals. So a lot of these companies, they only charge you if they win. So it's worth, even if you can get a few $100s off. The big impact is actually going to be on landlords out there, because landlords don't get that homestead exemption. Well, they don't get the homestead exemption, but they also don't get that 10% cap. Now, what we have seen with a lot of people that purchased last year, it's been a bit of a shock to their system because it's increased so much. And what the tax appraisal district basically does is they do like a reset. So they don't carry over someone's 10% cap. So if someone was previously tax appraised at $400,000 and the house is now valued at $650,000, they take that new $650, and that's the baseline. So that's where it's been a bit of a surprise for quite a few buyers out there. So if you are not a homeowner yet, and you were thinking about it, it's just something to keep in the back of your mind.
So although the inventory slight uptick and the number of homes on the market is welcome, we're still nowhere close to where we need to be to satisfy the demand here in Austin. So what does this mean for somebody in the market here in Austin that is looking at maybe buying or selling or as an investor? So we work with a lot of buyers, and for a great option for buyers, whether they're first-time buyers or they're contingent buyers, meaning they've got to sell before they buy. New construction is a great option. There's a lot of projects going on in and around Austin. The build time, things have changed up a little bit. In previous videos, we were saying expect to build time, so when you lock in that build, new construction build, to when you get the keys, it's like typically a 12-month turnaround time. But things have switched up a little bit on that as well. I'll let you cover that.
What a lot of builders are doing at the moment is they're essentially just building spec homes. Okay, so you don't get the option of your design choices or your structural choices, and they just release the home once it's the drywall is up or the frame is up. There are some exceptions to that rule, but certainly if you're in the price bracket of about 400,000 to 750,000, that is happening. That's typically what is happening. And like I say, there is the odd exception to the rule there. I was just speaking to a builder this morning actually, and they do give clients the option to still be able to do their design choices, but not for structural. So therefore build times, because they've gone through the hard part of, actually getting the timber and the permitting and what have you, it's actually a lot shorter. So you might be seeing like 4 to 6 months with regards to kind of going under contract and closing.
Yeah. If you're a seller in the market, I don't think there's really any change here to the advice and to the guidance that we give, which is, not pricing it too high in this market. We are seeing houses that are priced like that, and they sit on the market for, more than 10 to 12 days, and suddenly a red flag is raised. And essentially the impact from that is any consumer out there looking on the market, and they see a house that's been there for like longer than 10, 15, 20 days, they'll just typically pass by it because they're not sure. It raises the question, well, what's wrong with that house? So we're seeing some of that, and that's really the kind of, the main reasons why we might see a house that's sitting on there for like an extended time. If you're an investor, did you have anything to add to that?
Yeah, I do actually. So what we get from a lot of sellers at the moment is like, yeah, okay, we could sell, we've got so much equity, but where are we going to go? And, are we actually going to find a place? Well, there are options for that as well. We have a client under contract with one of these options, and that is the buy before you sell. Now, it does come with a little bit of a premium, and it varies per the supplier. There's Ribbon, there's Homewood, there's Knock, as some of the companies that do this. But what it's certainly for my client that's under contract on the purchase side, it's just given her so much confidence. She's been able to find exactly what she wanted, and then we literally listed her home last night, and it will go under contract, and then she's got the funds. So if you want to talk through some of those details, we can do that, because you don't want to feel like you're stuck in your house for the next 15 years because you've got nowhere to go. There are options.
Yeah, it's an amazing option. Investors out there. So I think for an investor that's looking for those long-term rentals, it can be a challenge to find something that meets the cash flow requirements in this market, and especially since there's no tax exemptions when it's an investment. So I think any renters out there, when it comes to those lease agreements come to expiring and renewing, to expect that those increases will be passed along. So just something to be aware of there. I actually know an investor quite well, and he's busy in this market. But he's busy with the picking up pieces of real estate and maybe doing long-term rentals, or more so doing some rehab work. But they're coming up. They're mostly off market. So people are coming to him from his network of contacts that he's built up over the years. Interestingly, I had a conversation this week with a city planner specific to Hayes County. And what was an interesting nugget that came from that conversation is that how busy they've been in the last 18 months, specifically on land development for mobile home living and RV pads. There's definitely an uptrend in that activity. So I think that, based upon some of the data and based upon some of the stuff we're seeing here on the ground, with the Fed and what's going on with their plans, with them announcing that they're going to be continuing to raise rates throughout the rest of this year and into the next year. So far this year, the federal rate increase is now 0.75%. There was a 0.25% in March, and then just this week it's been announced that they're going to be doing a further half-point increase as well. As the increases continue, the rates continue to increase, the demand will pull back some. And the graphic on screen now, it's showing you like a historical view of the past in the past where the interest rates have increased by more than 1%, and how that's impacted home prices. So for Austin specifically, we typically would not see a depreciation in home values. We would see a deceleration in how fast those home prices are appreciating. So, we might not see the double digits in that scenario, but we might go back to what would be typical for Austin pre-pandemic, which was 6 to 7% year-on-year home price appreciation.
We have such a shortage of inventory as well, and just to throw in here, I went to an economic forecast a couple of weeks ago by Mark Sprague. He's an independent economist, and two of the takeaways I've got several takeaways, but the ones we'll share. There's timber prices are going up by 3 to 4% a month still, and there's still like 30,000 houses short in the Austin area. And one thing I've never seen when I've gone to a forecast before, and even with the knowledge of interest rates rising, his last slide was buy now, which I was really surprised about. He doesn't need to, make realtors happy in his presentation at all. He's quite the opposite actually, but it was interesting to see that he still sees that the market is going to increase year on year on year in Austin specifically. Austin and Dallas are two very, very hot areas in the country.
Mm-hmm. That's it, guys. We'll leave it there. If you have any questions about any of this content, feel free to reach us on the details there below. Until next time, guys, take it easy. Bye-bye.
Bye.